This one is coming from CVV Rama Rao. Very good morning to you, Kunal, as well as Rajesh. And this one, the query that our viewer is asking is, he has following shares in his portfolio: Jindal Saw, Yes Bank and LIC. He wants to know what to do with these counters. The problem being, Rajesh, he's not mentioned his buy price or quantity or anything of that sort of information when he talk about these counters. But all of these counters are a part of his portfolio. What's your view now?
Good morning, Shail. Good morning, Sri. Good morning, Kunal. All the three stocks in the portfolio are, out of these three, I would say two are very good long-term bets based on fundamentals. Yes Bank is a little bit risky bet just because of the kind of things that has happened in the past. But taking one by one, Yes Bank to start with, the numbers have been improving in the last few quarters. Uh, Balance sheet has been cleaned up, I would say. And going forward, if the bank continues to perform the way it has performed in the last 3, 4 quarters, I think 23, 24 rupees is quite possible in the next 1 year. But I would like to reiterate that this is a risky bet. Keep your risk in mind before continuing with the Yes Bank. As far as LIC is concerned, is one of the largest insurance companies in our country with almost around 60 to 63% market share. The AUM is even almost equal to the entire mutual fund AUM, if not bigger. They have huge land with them, and a lot of things are in favor. They're launching new products, going into high margin products. And at these valuation, I think it's trading at a very attractive valuation. Somebody even considering to buy can even buy into that. As far as Jindal Saw is concerned, they're into saw pipes, which is doing very well. They have good order book, but the only problem lies with crude is trading at around 60 odd dollars, and these kind of companies face pressure in getting new orders. But at this point of time, at these prices, I think all three are a hold from our side.
Coming in on all three of those stocks. Before we just move ahead, I would request the producer to pull up the Nifty Auto chart because we have the CM March data coming in. Domestic passenger vehicle sales have come in at 3.81 lakh units, which is up 3.6% on a year-on-year basis. Domestic two-wheelers up 11.4. Three-wheelers also looking good with a 10.5% uptick, looking good for Nifty Auto. But let's move on and talk about the next query that's coming in. And Kunal, this stock in question is Happiest Mind. Our viewer Poonam is writing to us. She holds 50 shares of Happiest Minds at 624 rupees per share, sitting on a little bit of a loss right now because the stock is at 569 thereabouts right now. What's your take when it comes to Happiest Mind? What would you suggest her to do? Should she continue to hold on, hoping that she's going to come back to the break even and then move to profit, or should she book losses right now?
See, there are two parts to it. One is, of course, that do you want to keep Happiest Minds as a part of your core portfolio, or even as a portfolio stock from a mid cap or a small cap perspective? That's the first question which you should be asking about for, because they're in this kind of a market where even quality is available at a huge discount, whether it's large cap, whether it's mid cap. I think there should be a rethinking of the stock from entire portfolio perspective. Coming to Happiest Minds on the on the second space, I believe that there could be a space where the stock may go into a short covering. The bigger concern for the stock is the long-term trend for Happiest Minds. From a high which was made, I think, in 2022, when the stock was at 1450, 1500 levels, the stock has been consistently dragging over the last 2.5 or 3 years. Yes, there have been bouts where the stocks have recovered, gotten to a 20% recovery from the lows. But then when you look at this over the last 3 years, the stock has been into a consistent downtrend. That's why I would probably believe that the long-term trend for Happiest Minds may not be very positive. Yes, short-term wise, you might probably look out for a 15 to 20% rally from the recent lows for Happiest Minds.
Alright, so that's the take coming in for Happiest Minds. Let me take this next query then, and this one is coming from Venkat, writing to us from Chennai. He wants to know about Hindustan Copper. He holds about 100 shares at a buy price of around 340 rupees per share, sitting with a loss. Wants to know whether should hold on for the next 2 to 3 years. Wants to know also the target for the next 2 to 3 years. But let me come to you actually, Rajesh, on this. This query is coming from Rohan also on the similar counter. Rohan has about 3,000 shares at a price of 323 rupees per share. Can he add some more right now in his portfolio? One side we have a viewer who's sitting on a loss, is worried about it. Should he hold on for the next 2 to 3 years? We also have Rohan who's sitting on a loss, but what's your take?
See, I think at these price, the valuations are very attractive. Going forward, they can do very well because of the copper demand that's going up. The company is sitting on huge reserve. The only problem at this point of time is China. Because anything goes wrong with China, that's happening there. Country goes into recession, and all the entire metal pack would be in a problem. But there are talks that China would might come out with some amount of stimulus and all. That would be a big trigger. But these things are for short term only. But if you are talking of long term, by long term, when the gentleman is talking about 2 3 years, it's a very good price to buy, I would say. We have a target of around 250 to 60 odd rupees in the next 1 year. So one can add at these levels.
Okay, so that's the take coming in on Hind Copper. Kunal, what about you? Because we're getting a lot of queries on Hindustan Copper right now. Also, two of our viewers have written to us. What's your take on the technicals when it comes to Hind Copper?
See, I've looked at the long-term charts for Hindustan Copper and I'm very bullish on the stock, if you're a long-term investor. Now, there are a couple of things which you have to understand that yes, it's a high beta stock. It's going to swing 20-30% in a very short span of time. But if you're okay digesting those swings, and then if you're okay holding on to the stock from long term, I think it's a brilliant stock to hold on to. What we saw on Hindustan Copper in 2022-23 was a massive 10 to 12 year cup and handle as well as a rounding bottom breakout. Now these are strong indications of a major long term uptrend for stocks. And many a times we've seen stocks going into multiples when it goes into such kind of a conviction breakouts on long-term basis. So very bullish on Hindustan Copper, but as I said, high beta stock. So just be wary of that risk appetite and that position size which you want to do for the stock.
Right, so that's the take coming in on Hindustan Copper, both the technical as well as the fundamental view coming in for that particular stock. This one is coming in from Ignatius, writing to us from Kolkata, wants to know about IndusInd Bank, 20 shares, Kunal. He has at a price of 1,530 odd rupees. Good time to average this stock? If not, then what price is a good price to average it? He wants to know a target price for this one. He's been holding it for the last 6 months. He's saying he can hold on to it for the next 1 year as well. And in 6 months, look at the way how the stock has reversed. News flow as being primary reason why the stock has actually been impacted so hard. And now we are coming to the earnings season, which means that there could be some scope of volatility once again in the stock.
Absolutely right, Cheryl. Good prices, good news, they don't come together. So that's why, we've seen the stock falling very sharply because the news flow was extremely negative. But then, I look at it from a point where post that news flow, there has not been any incremental damage to the stock. I think if I'm not wrong, 720 or 730 is where the circuit, the 20%, 25% gap down and opened for IndusInd Bank. Post that, the stock fell down by another 100 points, but then it's recovered also in this last 1 month of the price trend, which means that we are looking at the 700 to 720 as a good pivot support for IndusInd Bank. I would believe that it's a very good level for you to hold on to the stock from a long term. If you can buy the stock, say at current levels, and in case if post results, if there is any kind of a further dip into the stock price, I believe that that should be a good strategy. My only concern is that your time frame of 1 year may not be substantial enough, because I've seen stocks which go into such kind of a 30, 40, 50% correction. They generally take at least 1 to 1.5 odd year for these stocks to recover and come back to the starting point. But then if you're a long-term investor, I think it should reward you pretty much on the positive side. So hold on to the stock, average at current levels, but hold on to it for more than 1 year.
Hold and average at current levels, but keep your time frame for more than 1 year is the advice coming in from Kunal for IndusInd Bank. Let's move on, and while we're talking about banks, Rajesh, we'll come to you. Next query is coming in from our viewer, Mr. Mohit, who's writing to us from Ludhiana, and his query is about SBI because he holds 1,000 shares of SBI at a buy price of 184 rupees per share. His time horizon is 2 years. He's asking what should his next step be. What's your view on SBI?
Continue to hold. If your funds allow, you can even add the best bank in the private sector space, the largest one with large number of branches doing very well, balance sheet cleaned up, and I am almost at a decent stage. Everything is going in favor of this bank, and the best part is valuations is very attractive. It's a buy from my side.
That's the take coming in on banks. Welcome back. You're watching Buy Now, Sell On ET Now, show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number flashing on the top of your screen. And do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. along with the buy price, the quantity, as well as the time horizon, because in that way our experts will be able to help you better. For the short-term queries, we have Kunal to take them on the technical front, while for your medium to long-term queries, we have Rajesh Agarwal, who is joining us on the fundamental. Once again, good morning to both of you, and let me continue taking the queries then. And this next query that I have is coming in from Bharadwaj. He's writing to us from Coimbatore, wants to know about Nalco. He has about 1,300 shares at an average price of 185 rupees per share. He wants to know whether he can buy more at current market price. He's looking to hold on to this for the next 3 to 5 years. 3 to 5 years, a very long term. Actually, when you talk about a commodity-based company, Rajesh, do you think that now it makes sense to add some more of Nalco in your portfolio, especially during these uncertain times? You've seen a stock price depreciation. Hopefully, in the next 3-5 years, the stock will have a brighter future, given it is a PSU.
Still, there are two things. Uncertain times give you very attractive prices, and these prices are attractive for now. The stock has seen a massive cut in the recent past. And despite the fact that the capex has been completed, they have a huge capacity, doing very well, giving good dividends, and the aluminum demand across the world is growing. Despite that, Nelcom saw a massive cut in the market cap. And these prices are very attractive for a long-term investor, since the investor is talking about 3 to 5 years. That's a very good price, I would say. In the short time, it would be very volatile because of China factor belonging to the middle pack, commodity pack. But for a long-term investor, these are very good times to invest. So it's a buy from our side.
Coming in on Nalco, let's move ahead from that. And Kunal, coming to you, our viewer Mr. Nikhil Sharma is writing to us. Stock in question is Shriram Finance. He's saying that he has 30 shares of Shriram Finance at a price of 665.5 rupees per share. He's asking, do you believe the stock could hit 675? That's the near-term target that he's predicting for the stock. Do you agree with that? And he's asking, when would be the right time to exit, or is the stock worth holding on to right now?
See, it's worth holding on because what I can add on to the charts is that the stock is showing signs of a potential golden crossover, where the 50 DMA is about to cross over the 200-day moving average for Shriram Finance, and that I believe could probably speed up the upward momentum for the stock in the near to medium term. So, and in many cases we've seen that the stock at least surpasses about the previous highs, which is around the 695 mark for Shriram Finance on the swing chart. So, potential for the stock to go back to 700 plus as well in this leg of uptrend.
All right. This next query that I have is coming back. I'll come back to you, actually, Kunal, on this one. And this one is on BSE. We have Smita Vikram from Bangalore wants to know about BSE. She's purchased 25 shares at a price of 5,255 rupees per share. She wants to know, for the short term, makes sense to hold on to it, book profits at current price. And the other one being from Deepika, who's writing to us from Mumbai and wants to know whether she should buy BSE right now. What's your take on both of it? A, should Smita actually go ahead and exit out of this, book profits? And on the other hand, should Deepika go ahead and buy some more right now, or buy it afresh right now?
See, I think buying afresh is a good strategy for the second viewer, and I think in this case, I would believe that even at current levels, the stock holds substantial potential upside over the medium to long term. And for the first viewer, I think which you bought at lower levels of 5,200, 300 plus mark for BSE, even for that viewer, will suggest that you should hold on to the stock. Now there are multiple reasons for that. One, of course, is that the stock has been doing exceptionally well in this last 8-9 months of the overall market volatility. We've seen that stock has done reasonably well over the last 2 years. Even this leg of the bounce, technically the stock has bounced off from almost exactly its 200-day moving average. So chart patterns are very bullish for BSE. Now the only concern which could emerge for both the viewers is that there could be an occasional period where the stock may go into a sudden bout of volatility, and when that happens, you have to be ready for buying or adding the stock in case if there is a 10 to 15% swing on the downside for the stock. So it's a good price where you can look to start investing from a long-term day, but just keep some powder dry in case if there is a further correction or a sudden correction to the stock price, look to add further on the downside.
Okay, so hold and even buy on dips further is the strategy for BSE from Kunal. Let's move on, and Rajesh, coming to you, the next query is about Arvind Fashions. Our viewer Pratiksha is writing to us from Oman. She is holding Arvind Fashions and making a loss of about 15 to 20% on her holding. She's asking if she can continue to hold for a year, or should she average Arvind Fashions now? What's your take on this stock?
See, averaging at this point of time would be advisable because there are a lot of issues going on with the tariff war and all. Textile is going to be affected, as we all know. So, at this point of time, putting new money into Arvind Fashions won't be suggested. If you want to be in textile, maybe a Vardhaman textile would be a better choice. But as far as the existing holding is concerned, I think market has corrected quite a lot in the last few months, I would say, and any bounce back should be taken as an opportunity to exit. Maybe a price of 410, 415 would be a good level to exit.
All right, the next query is coming in from Venkat Rao, writing to us from Vishakhapatnam, and he wants to know about IRFC, Kunal. He's a senior citizen, he's a long-term investor, and he's a great fan of yours as well, is what he's mentioned in the same breath. IRFC, 900 shares at a price of 178. He also has BHEL in his portfolio. The buy price for that is 1,300 rupees per share at, he has 1,300 shares at a buy price of 304. He's in huge loss. At what price can he average both of these counters? What's your take coming for IRFC, BHEL? Both of them seeing similar cycle of an upturn, and both of them have seen similar bout of correction as well.
Well, yes, Cheryl, thank you so much for that. I believe both of these stocks are good keepers in terms of your portfolio. So you should not tinker with the holding as such, whether you want to sell it or not. On the adding part, I believe that current levels is a good level where you should look to add. Now, don't look at that these stocks have formed a low which has been 10% lower than the current market prices. You are always going to miss trying to time the bottom into these names. But then what you have to look out for is a cycle upside, because I believe that railway stocks on a larger basis, I think we are looking at a potential cycle revival for many of these stocks in this space. IRFC is one of the better bets from the pack. And BHEL also, I think, has been doing exceptionally well on the long-term basis. And I think closer to that 200 mark. In fact, at 185 to 200 range, I'd mentioned on the show that the stock would be a very good add from a long-term play, because that seems to be a very strong base or a support for BHEL. My only concern is that I'm not sure whether in the next, say, 3-6 months, the stock could probably come back into that kind of a retest of the previous lows of 185. So I think at current levels also, you can look to add BHEL. Both of them are very good stocks. You should keep them in your portfolio.
Okay, we just spoke about IRFC and BHEL. Rajesh, I'm going to come to you because our next query is coming in from our viewer, Mr. Sandeep from Delhi, and he's talking about IRCTC. So now that we've spoken about IRFC, let's also get in your take on IRCTC. He holds about 2,500 shares. His buying cost at an average is 736 rupees per share. He's asking if he can continue to hold for 3 to 6 months. Should he exit or add or hold? So these are the options he's given you. What would you recommend to our viewer, Sandeep?
The fact that IRCTC is a very strong company, have almost monopoly business in almost all the segments it operates, be it ticketing, rail near, catering. It has not moved up quite a much. And its tourism segment is also doing very well. Valuations are very attractive, debt-free company doing very well. And the number of trains being launched in Vande Bharat is Tejas, is a very big positive for IRCTC. They have tied up with Zomato. They are going for full coach booking. They are going for outside catering. These are very positive for IRCTC for a long term. For 3 to 6 months, lot depends on the market conditions and all. But fundamentally, it's a very strong company to hold in a long term portfolio. I would say keep your time horizon a little bit stretched to 12 to 18 months and continue to hold.
This one is coming in from Satyaveni, who's writing to us from Hyderabad. Long-term investor purchased Canara Bank, about 3,000 shares, Kunal, at a price of 116 rupees per share. Can hold, exit, average, and at what price?
See, you can hold on to the stock. The only concern with stocks like Canara Bank is that these stocks are, they are reactive to a lot of news flow around them. And when the news flow is, not there, these stocks, they tend to underperform. Now, look at the last 2-3 months of a cycle where private sector banking stocks have done exceptionally well, managed to withstand the major part of the market volatility. In this phase also, many of these PSU banking stocks, even the likes of Canara Bank, if I can add even SBI, Bank of Baroda, which are quality names in the PSU banking stocks, even these stocks have underperformed. So the only concern is that these stocks are more prone towards reactive price movement when there is a lot of news flow surrounding the stock. But again, a quality name like Canara Bank, my sense is that the stock should make a comeback in the next 1 to 3 months. So if your buy price is at 110 plus levels, I believe you can look to hold the Canara Bank at current levels. Maybe even look to add if the stock dips back again to that 88 mark.
To hold and buy on further dips is a strategy for Canara Bank from Kunal. Let's move on. And Rajesh, our viewer Sandeep is writing to us from Hyderabad. He's got 2,000 shares of GMR Airports at 86.3 rupees per share. He's asking if in the next 3 to 4 months you see this going at 90. So we'll rather take it with Kunal. Kunal, he's asking about targets. So do you see 90 on the charts anywhere in the near term for GMR Airports?
Yeah, in fact, I've been bullish on GMR Airports over the last 2 weeks or so when the stock was trading significantly below the 200-day moving averages. My expectation was that the stock would surpass those averages and then at least look at more of a trending upside. Now at current levels of 85 plus, I strongly believe that the stock has restarted a trending upside, and in this leg, the stock can surpass the previous major highs. I think if I'm not wrong, 96, 95 is the previous major high for GMR Airports. The stock should be able to surpass those levels. That's what my expectations is.
All right, let me take this next one to you actually, Rajesh. This one is coming from Rajapan, writing to us from Trichy. He wants to know about NTPC Green. He's holding it at the levels of 108 rupees per share. What's your take coming in on NTPC Green? I'm not asking this query to Kunal because it's a fairly recently listed counter. So what's your take on NTPC Green? You think it's a good bet to stay put with it, given the fact that you have this entire transition also that is taking place? No doubt it feels like there is a pause in it, but there isn't. A lot of things happening in the ground when you talk about this transition to the green energy space. But what's your take on NTPC Green? A good bet?
You said it right, sir. A lot of transition is taking place, and we think that's a big story going forward for the next 2-3 years at least. And with the kind of capacity NTPC Green has, the backing of NTPC, its parent company, things are very good for it. I think it's a must to have renewable energy stock in one's long-term portfolio. At least a small portion of your portfolio should be into this. So it's a buy from our side for a target of 120 odd rupees in the next 1 year.
Call on NTPC Green. That's the take coming in from Rajesh. But viewers, on that note, we'll step into a very short break and you keep writing to us and we'll resume addressing your queries on the other side when we return. So you stay tuned. Hi there, welcome back to Buy Now, Sell Now, and time now to once again begin addressing all your stock-related queries, viewers. And let's welcome back on board Rajesh as well as Kunal, who have joined us for today's edition of Buy Now, Sell Now. And Kunal, coming to you, next query coming in from our viewer, Mr. Amit Sood, writing to us about Volta's April futures at 1370. He's carrying 3 lots as we speak. He's asking, should he square up and book losses or roll over to the May series?
See, roll it over to the May series, but my only concern is that just hedge it, for the May series because there could be a potential, maybe a last leg of a correction which could happen for Voltas. Because the stock has been an underperformer, and generally when you see stocks coming very close towards the retest of the previous lows, there is generally an anticipation that the stock would break below the previous lows and then form a bottom for itself. So I believe in that anticipation that maybe the stock can break below that 1200 mark, say in the first half of the May series. But that I believe could be a very good opportunity for you to even add further. So just hedge it for the next couple of weeks for Voltas by maybe buying puts or selling the calls at higher strikes. That's a strategy call which you have to take. But then post that, I think once that last leg of the correction is over, I believe that the stock can make a very strong comeback.
This next one is coming in from Vishal, writing to us from Dubai. He wants to know whether it's time to go ahead and accumulate Praj Industries in his portfolio, Rajesh. He has already some shares at a price of 443 rupees per share. The other one is Viatech Vabag. He's holding on to these shares at the price of around 663 rupees per share. Do you think that it makes sense for the longer term? Now is the right time to go ahead and actually purchase these counters because they are in the industries that are pretty much domestically oriented, which will actually benefit as the country grows, given the fact that Praj Industries has that entire ethanol play. You have Viatech Vabag, which is into water treatment as well.
Taking one by one, Cheryl, Viatech Vabag is a very good buy. Water treatment is a good story. It's one of Indian multinational company, I would say, doing very well, not only in domestic market, but internationally also. They have got good order book. Numbers are pretty good, and at these valuations, it's a buy from a side for long-term investor. But as far as Praj is concerned, no doubt it's a very good domestic story of ethanol and all. But if crude is trading below $60 and OPEC saying that the demand scenario is not that good, people talking of US going into recession, all those things are pretty bad for companies like Piraj. Long term, yes, it's good, but at this point of time, I would say whatever you are holding, stay put with that. Do not add at this point of time.
City coming in on Praj. Kunal, coming to you next, query about LIC Housing Finance. Our viewer, Mr. K. Venugopal Reddy, is writing to us from Hyderabad about LIC Housing Finance. He's asking if this stock can be bought or further averaged at current market price for a time frame of 6 months. He's already got 79 shares earlier, holding at a buy price of 621, stock at 580 right now. So what's your take when it comes to LIC Housing Finance?
See, you can average the stock at current levels, but my only concern is that just keep the quantity a bit more lower. Generally we look at averaging out with an even quantity of whatever you've purchased earlier, so that helps you, drop down your initial purchase price by a huge margin, especially when the stock has gone through a correction. The only catch over here is because LIC Housing has been a very low to moderate beta stock. So even if you go for a sizable quantity over here, it may not do any major significance in terms of lowering your cost price, as well as the the timing in which the stock can come back to the average cost price or your initial cost purchase price for LIC Housing. So it's a good stock. You can hold on to the stock from a medium to long term play, but then averaging out, I would probably believe that you can do at current levels, but with a slightly reduced quantity.
All right, so that's the take coming in on LIC Housing Finance. Kunal, let me come next to you. Actually, let me take this query to both of you, because this one is coming from Padmaseva Rao, writing to us from Bangalore. And it's a very unique query given the fact of what he's writing, and I'll read as he's written this query, that without knowing the name change in Zomato, I sold about 1,500 shares which he had bought at around 60 rupees per share. Now he wants to know what's a good price to buy this one. Kunal, I'll come to you for the query that what's the right price to buy. But then this is a trick question, right? I think this one is something that worries all of us, that these name changes happen and we tend to miss these name changes. Now you have Zomato, which is now known as Eternal. And given the fact that both of you all have been in this industry for years, I think this is also a very tough part of the job, isn't it, Rajesh?
Yes, it indeed is a very tough job. Sometimes, even when you ask questions of investors and the names have changed, at least I get confused. Sometimes I would say, maybe you don't remember the new names and suddenly it crops up. So these things happen. This is a part of the game. To talk of Eternal, that's erstwhile Zomato. I think buying at this point of time, I won't suggest, because of the fact that Q3 numbers were pretty bad. And that was just because of the kind of expansion they made in Blinkit. The expansion target, which was 200,000 odd stores in 2026, has been preponed, I would say, to 2025, and that would again put dent on their numbers in the near future. So I assume that there would be massive correction after the numbers, if they are pretty bad, which they persist would be. So at least at this point of time, no buying. Maybe at a level of 200, 190, 200 odd levels would be a good levels to enter.
So that's the take coming in on Eternal. On the fundamental side, that we have to wait for the earnings season, given the fact the stock is seeing a sizable correction, and also earnings may not be that great. So just hold on to it in order to buy this one. And yes, it is also a tough job, Kunal. I think I had asked you this question earlier as well, that you have to remember all these name changes and also then make sure that you are talking about the right stock at the right time.
Well, yes, and this generally happens when my assumption is that when you have too many stocks in your portfolio, and becomes difficult for you to track or keep a track of these too many stocks. So that's where we always focus, because there are 2,000 plus stocks available on the NSE, and I think more than double of that on the BSE. So you can't have all stocks in your portfolio. That's why you have to choose your the kind of picks on a relatively more stronger basis. So something which you can track quite consistently. So generally we keep 15 to 20 stocks in best of the market times is a good number of stocks in terms of portfolios. So maybe that could be a strategy which you can look to rectify. But I believe Zomato current Eternal, I think it's a good buy at current levels. I'm not sure whether the stock would go back into a retest of that sub 200 lows, but if in case that happens for the stock, that could be a further level where you can look to average.
Okay, so that's the Combo view coming in on Zomato, now eternal. So all our viewers, please take note of this and be mindful about the stock in your portfolio. We have a contrasting news coming in from fundamental experts as well as a techie. That's Kunal joining us in the studio. But let's move on. And from Zomato now, Kunal, I'll come to you. Let's talk about Titan, because our viewer, Mr. Rajan, has asked for your advice. At what price can he buy Titan? He only is looking to hold the stock for a short term of 6 months. Would you recommend that? Would you recommend increasing his time horizon, and what's the target for Titan?
In fact, yes, over the last 1 week, 3-4 days specifically, I've been advising about Titans. It's been one of the calls, and my expectation is that at least for 3400, 3500 levels, the stock should be good for a decent upside, because there has been multiple patterns which have emerged positive for Titan: a double bottom formation, a rise in the indicators, a bullish RSI divergence, and then a potential break which could happen above the 200 DMA for Titan over the very near term. So on the back of this, I would suggest that you can consider buying the stock at current levels, if not already bought. 3400 could be the first target which you could look on for, but in an optimistic scenario, we may look out for even 3600 to 3800 for the stock.
Alright, so that's the take coming in on Titan. Let's take the query on KPIT Tech then. Vedant M from Chikmagalur is writing to us, and Rajesh, he has 500 shares at, he has 100 shares at a price of 500 rupees per share. He wants to know what should he do in his portfolio. Should he go ahead and add some more of KPIT Tech in his portfolio at these price? He is sitting on a very good set of profits.
See, sitting on a very good set of profit, that's very rare at this point of time, because everybody talks about sitting on losses. As far as company is concerned, they are doing good in auto software, I would say, and the numbers have been pretty good in the recent past. But going forward with the kind of scenario which we are witnessing in the IT sector as a whole, I think adding at this point of time would be too risky. If you want to put money into the same type of companies, I would say Tata Technology in the same kind of business is trading at a very, very attractive valuation, from a highs of 1200 odd rupees, 1300 odd rupees at the time of listing to almost 600 at this point of time. It's a massive 50%, more than 50% correction. Belonging to the Tata Group, having the same kind of portfolio, that's also a good company. So I think whatever you are holding of KPIT Tech, continue to hold. When you are thinking of putting new money, you can go ahead and buy Tata Technologies.
Okay, so that's the take when it comes to KPIT Tech and also the alternative Tata Tech coming in from Rajesh. Kunal, coming to you. Next talking question is TVS Motors. Our viewer, Mr. Karthikeyan, is writing to us, and he would like to have technical advice on buying TVS Motors for the long term. Would you recommend that? And what are the targets that you're spotting on the charts?
It's a good stock, because the stock is not a very high beta name. There is a point where many of these auto stocks, they were down 40-50% also in this last 6-8 months of the price correction. TVS Motors, of course, is not a stock which falls in that category. The stock fell from 2800, 2900 towards 2200 mark, which is just about a decent 20-25% correction for the stock. So that, I believe, is a advantage for a stock like TVS Motors with respect to its other peers. Good stock to hold on to from a portfolio perspective, and I think if this cycle of uptrend continues for TVS Motors like what it has been doing over the last 5, 10, 15 years, then you should be looking at potentially over the next 1 to 2 years the stock to scale past about the previous lifetime highs of 2900.
So that's the take coming in on TVS Motor. On that note, we'll slip into a break in this edition of Buy Now Sell Now. More queries on the other side. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of his stock related queries then. And this next one that I have is coming in from Ravi Chandra, who's writing to us from Visakhapatnam. Wants to know about ICICI Bank. Kunal, 50 shares of ICICI Bank at 1,328 rupees per share. MCX, 50 shares at a price of around 5,390 rupees per share. Wants to know whether he should hold on to both of them and try to book out whatever profits he's making at this point in time. He's a short-term trader stroke investor. I don't know, short-term investor is what terminology, but trader I can understand.
Maybe the markets make him an investor, or downtrends make him an investor, just on a lighter note. But I think both of these stocks are there, of course, good quality names. ICICI Bank on the longer term charts have been looking fairly attractive. I sense that the stock has much more higher potential of a decent or a longer term upside from even from current levels. But then there are few concerns which could emerge on the short term charts for stocks like ICICI Bank and MCX, because because these stocks have done reasonably well in the worst of the market times, generally expect that the stocks may remain into a consolidation for a prolonged period of time. And that's where sector rotation comes at play. So I believe in that sense, what you may do if you're a short-term trader specifically for both of these names, then maybe another 3% higher for both of these stocks, ICICI as well as MCX. You can consider booking out partial profits or at least full profits. And then on the downside, once these stocks go into a correction, that's where you can look to buy back, assuming you are a trader into both of these stocks.
So that's the take coming in on ICICI Bank and MCX both. Next question is from our viewer, Mr. Imtiaz from Kolkata. And Rajesh and Kunal, this question is to both of you. First, let's get Rajesh's view. Two stocks in question, Varun Beverages and Voltas. Now, Voltas we've spoken about. So let's talk about Varun Beverages and we'll try and get a combo view on that. Rajesh, coming to you first. Mr. Imtiaz holds 300 shares of Varun Beverages, bought at a price of 465. It's at 548 right now. He's asking what he should do on the fundamentals. How is Varun Beverages looking like to you?
Continue to hold. If your funds allow, you can even add. The company is doing exceptionally well. It's one of the largest Pepsi bottlers outside the US, doing very well not only in India but also neighboring countries like Nepal, Sri Lanka, and other places. They have moved into non-carbonated drinks also, and that's also doing well. And with the kind of expectation of summer this year, I think the demand for these kind of companies, Varun Beverages, Voltas, the summer-related companies, is going to be very high. So numbers are expected to be good in the next 2 quarters. So we have a target of 600 plus for Varun Beverages. It's an ad from our side. Somebody holding can continue to hold.
Okay, so that's the fundamental view on Varun Beverages. Kunal, coming to you, what's Varun Beverages looking like on the charts? Let's say for the next 1 year, what's it looking like?
I think it's a very good buy. I don't think that the stock on the monthly, quarterly charts has shown a classic bullish engulfing pattern. That I believe is a very strong context for the stock to perform exceptionally well going forward. So if you have a time frame of 6 months to 1 year, I think it's a good zone where you can look to buy.
Alright, so that's a take coming in on Varun Beverages. Let me take this next query then, and this one is coming in from Joshi, who's writing to us from Trivandrum and wants to know about Petronet LNG. Can he look to buy Petronet LNG for the longer term at this point in time? Rajesh, do you think that it makes sense? A lot of things are happening geopolitically actually, and when you talk about LNG supply also, that also comes into some picture over here. I'm not too clear if I'm not too sure if my view on that particular front would be right. But what's your take? Fundamentally, Petronet LNG is a good bet to buy right now?
See, there are better opportunities in the market, I would say. Even in the oil and gas space, you have good names like HPCL or IOC. They give good dividends. Chennai Petro gives good dividend. So why Petronet LNG? I would say avoid at this point.
Avoid on Petronet LNG, that's what we're seeing. Kunal, coming to you, our viewer B. Soumya is writing to us from Chennai. Stock in question is BPCL and Coal India. They bought BPCL at 275, Coal India at 390. He's asking what is the target one should expect? Holding period is 3 to 6 months. What's the view?
So BPCL maybe another 5% on the upside. I think closer to 300, 305 odd levels is what you can expect as a swing resistance. That's where the 200 DMA is for the stock. And for Coal India, I believe that if in case the stock gets into that further momentum upside, I think even 425 could be possible for Coal India because the beta of the stock is a bit low. So the only concern is that how much time will the stock take to break past above this 400, 405 barrier. But I believe that it's a good stock to hold on to. If you are looking at it from the next, say, 1 to 3 months, 425 could be a decent short-term target for Coal India.
All right, let me take this next one. This one is coming from Vijay. Kunal, let me come to you once again because he wants to know about CDSL. He has about 33 shares of CDSL, which he's purchased at a price of around 881 rupees per share. RIL, 135 shares, which he has at the price of around 1,227 rupees per share. Good time to average now and hold on for the next 6 months?
Yeah, I think both these stocks are good candidates for averaging out at current levels. CDSL specifically after this 300, 350 point plus kind of a correction from 1600 levels to 1200 plus mark. So I think this is a good zone where you can look to average further. And for Reliance Industries, from a long term, the stock looks to be quite strong. And the fact that the stock has gone through almost like a 300, 350 point correction makes the risk reward also very attractive. So would suggest an average on both of these names.
Okay, Average CDSL as well as Reliance. Rajesh, coming to you, we don't have the viewer's name. They've asked on CAMS, Gokuldas Export and Ajanta Pharma for the next 2 to 3 years. What's your view on all three of these counters?
The only camps you can buy. The kind of momentum we are witnessing in capital market, the growth in mutual fund. It's a long-term story, I would say. And the more the mutual fund AUM grows, the more the CAMS business grows. And it's trading at a good valuation after the kind of correction. Other two are avoid from us.
So that's the view coming in from Rajesh. But on that note, thank you so much, Kunal, as well as Rajesh, for being a part of the show, taking all of our viewer queries patiently and answering most of the trick questions as well. But viewers, with that, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Snehi, myself, and the team that put the show together. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.